you got time.
Welcome back to another episode of the Brutally Honest Loan Officers podcast. I'm Derek Brown. With me, as always, Stephen Brock. Say hi, Stephen.
Hi, Stephen. What's up, buddy?
Hey.
How was your weekend?
Jam-packed.
Hmm.
Friday, left work a little early. Go get Bennett and head to Art of Animation Hotel by Disney.
Yeah.
Stay there we had conjoined rooms or whatever with our friends because it was their daughter Harper's birthday and she wanted to stay in a mermaid room. So we stayed in a little mermaid room. And then
I got you.
we checked out, like we just did like the boardwalk and hung out that night. And then went to bed, woke up the next morning, packed up, took everything over to Swan and Dolphin, and then walked to Epcot. Went to Epcot for the day.
Which
and
one
then
you stay at, the Swan or the Dolphin?
The Swan.
We went up there all the time. It's always the Dolphin,
No.
right?
Yeah. I'm not sure.
The Dolphin is the one that's further away. Like you walk past the Swan, right, to then go over the bridge.
I think we were in the Swan.
Yeah.
I'm not 100% sure.
Does
We
it have a
weren't
big
in the
fountain
Swan
outside in the front?
Reserve. What?
Does it have a big fountain outside in the front
Didn't pay attention.
or in the back?
In the back, yes. There was a
In
big
the
fountain.
back, the one with the big fountain is the Dolphin.
We stayed at the Dolphin.
Yes.
Dude, I don't know, man. That property
That's
is
the one
nuts.
that Nikki went to there like as a kid or
I don't know. And then I guess there's the Swan Reserve, which is supposed to be fancier. But maybe you just spend so little time in the room.
Yeah.
So I'm not trying to spend big bucks on something fancy that we're not really going to even be in. But
yeah.
So yeah, we did that, hung out by the pool. And then we woke up the next morning. We didn't get to ride Soarin' the day before because little Harper was too short by like 1 inch. And we had like the lightning lane, and so we were like, this sucks, but whatever. And then the kids were just spent.
Yeah.
Like we needed to take a little bit of a nap or whatever, and then we wanted to go to the pool and hang out with our other friends that were there for their daughter's birthday. So went back, but then the next morning we woke up and we were gonna just head home, but Tony was just like, well, what if we tried to go like ride Soaring right now? Like let's just go try.
Yeah.
And I'm like, all right, we can walk over there. So we walk over there, got denied at the gate, blackout.
Oh.
Yeah, so our tickets, because Sunday starts their week and it's Easter week, holiday week.
Oh, yeah.
So Sunday said, nope, no entry. And I'm not going to sit there and spend however many hundreds of dollars for a couple hours. No. So we went home and Bennett got ready for his first T-ball game for the season and he crushed it. And then I went to the Solar Bears game last night with my networking group, bunch of guys.
He made it to first base.
He did. He knows where to run now. His team, though, it's a different team. And it's just all based on ages. And they have a lot more kids this season, which I guess just spring, maybe they have more kids.
Yeah.
Because there were four teams, 2 games going on at the same time. But yeah, I mean, he hit the ball at one point and parents were like, oh my God, we got to back up. Like he almost hit some parents. It was awesome. It was awesome.
Nice.
So.
Nice.
What about you, man? Anything exciting?
Family was in. My dad and stepmom were in. They came in on Friday before they're heading back to Texas today. So they were in for this last little weekend. When they left on Saturday, we were almost done with all the, I want to say remodeling. I mean, I put a fireplace in. I guess that's kind of remodeling, but like repainting the master, redesigning it, probably redesigning.
Time out. You put a fireplace in, inside your house for the chimney?
No, not like it's electric one. I thought I've sent it to you. I'll send it to you right now.
You might have. I don't pay attention to everything you say. You send me a lot of shit. So.
Yeah, I mean, it's usually not appropriate stuff, but where is this fireplace? I have a picture of this somewhere. I had a picture of it all painted and done.
Okay, Steven, you're taking too long.
You put it in.
You put in.
We did that. All of that stuff.
Good job.
Got that done. It's probably because it's on my. You got a new phone. That was a disaster. I was sending this one before everything was painted around it. Um, yeah, did that. And then Sunday we started football again, but it was just meet and greet. So we just went out there, but it poured all Sunday. Like I was supposed to do yard work. I was like, oh, my dad's coming in Friday. I won't do it then. I won't do it Saturday. I'll do it on Sunday. And it poured all
Mother
day,
Nature had other plans for you.
all day. And now I'm watching now. I'm like, oh, like, okay, at least it's lighter out now. Like, okay, 5:30, I'll get out there, mow, do everything. Like, you can't go 2 weeks anymore. Like, and I think
Yeah,
it's been 2 weeks. So, like, I can't go another week. Like, it's got
right.
to be every week now. And I'm like, it better not fucking rain today. Like, it better be good. So, hopefully,
Well, I hope you're able to get your yard work done today,
I
Stephen.
want to mow my yard. Won't take long. But, all right, what are we talking about today?
Something that might ruffle a few feathers.
Ooh, what is it?
We're talking about something that nobody in the industry really wants to say out loud, probably, but why some realtors and loan officers give terrible advice.
Oh, I don't think
So,
they give it purposely wrong. They just don't know what they don't know.
right, and I'm not saying everyone. Like, there's a lot of amazing professionals out there that we work with, both loan officers, realtor side. Um, but there are people giving advice that can cost buyers a lot of money, or just completely derail a deal, you know. So I wouldn't say that it's always malicious either, but that's why we're gonna kind of go through it and explain what we mean by that.
Okay. So, reason number one, lack of experience.
Like you
Obvious
said,
one.
you don't know what you don't know.
You don't know what you don't know. And this isn't oh years in the business. This is lack of experience. I have seen some agents only be in a couple of years and have more experience than agents that have been in for 20 years.
Right.
Loan officer side back that. So lack of experience, lack of knowledge is what I would really put it.
Well, and I love it too, like because I have a couple agents that I mean, technically they've been in the business like less than 5 years, but
Yeah.
they're crushing it. And then they put in an offer, they start talking to a listing, let's just say they're on the buyer side, listing side, and the listing agent's like, I've been in the business for 30 years. And then we look up like, because you can look up everything, and we see that like you did 2 transactions last year and 2 the year before. Like you're not even a full-time agent.
Yeah.
Like, so wait, what? Like you're gonna clap back by saying you've been in the industry for this long and yet you aren't doing it. Like,
There's a
I
difference.
don't
You've
know.
had
So
your
maybe,
license for that long. It doesn't
yeah,
mean you're actually doing it.
yeah. So I don't know. The same thing with loan officers. There's just so many moving parts, underwriting, contracts, appraisals, negotiations. And if somebody hasn't been through enough scenarios, they don't know what they don't know. And I can tell you right now, as a loan officer, I'm not going to speak on realtors. It's probably the same, but I know from experience that the more loans you do, the more you learn. You learn
Yeah,
by doing it.
exactly.
Like you could study all the guidelines in the world and still be a bad loan officer.
And guidelines, like I feel like as a loan officer, you're supposed to have a general idea of guidelines. But a
Right.
lot of times you can listen to somebody, listen to it, figure it out because there's so many different types of loans and ways of doing it. And there's a lot of gray area on those guidelines too that you have to interpret yourself on like how you're going to look at it. But you need to know enough that when somebody's talking to you, you can understand it and kind of figure out where to put them. But it's really once you get all the documents where they're actually going to go.
Right. Well, and like first thing that I can think of is I had a buyer. He was first time home buyer, self-employed, and like this is a couple of years ago before bank statement loans had really like gotten better.
Mhm.
And so we were looking at it, but his grandmother wanted a cosign. Grandmother had an IRA with a ton of money in it. And I was like, this is really easy. Like we can just do a normal conventional loan and do an IRA distribution. And I mean, it's so simple. Like,
Yeah.
he's like, okay, sounds great. And then next thing I know, we're going under contract. And he's like, so I've got this buddy that's a mortgage broker. And I'm like, okay. And he's like, he can do it. And I forget what the rate was, but their rate was better by like a quarter, like not a huge difference, but slightly better. And I just like we couldn't get that lower. He wouldn't send me a loan estimate where I could see if there were other fees, like, so are you actually paying for the rate or whatever. And so it was a 60-day contract. 30 days later, he calls me and he's just like, my buddy says that there is no way you can get this done. Like he can't do it, and there's no way that you can either.
Yeah.
And I was like, buddy, he had 60 days and you guys aren't anywhere? Like, so then, I mean, we were clear to close in about 14 days after that.
Wow.
So it just, I mean, it was a really simple loan. It wasn't hard. And yet this other guy didn't know like the guidelines with IRA distributions and stuff like that. And it was so easy.
That's the thing. Like people just like you said, don't know what they don't know. They don't know how to structure, how to look at it. And, oh, this can't be done. Like,
Right.
no, that's not true at all. And if it's a no, it's like, okay, how do you figure it out? There are some times that things, no, we can't go this way. Okay, let's figure it out, kind of thing. But
Right.
let's
Well,
do
and
it.
like, so in that instance, let's just say he talked to his buddy first.
Mhm.
And his buddy just said, no, there's no way to do this. Like, you're going to have to show more income on your tax return or whatever, and then it delayed him buying. I mean, he wouldn't have been able to buy, according to this other mortgage broker.
Yeah.
And we closed him in like 2.5 weeks. And he was just like, and he kept asking me, like, I don't understand. And I was just like, I don't know what to tell you, man. Like, I know how to do it. I'm not gonna like teach you how to do it so that you can go back to your buddy and then teach him how to do it, and then I lose the deal, you
Yeah.
know. So it's just, yeah, I don't know. But you don't know what you don't know.
I mean, like a biggest one I've seen is where these people weren't able to do something, and then I'm kind of like they didn't disclose it. I was kind of looking through stuff, and I'm like, where is this money going to or coming from all the time? Like I see you keep getting this deposit, and they were newly self-employed, and they were told no. And I was kind of looking at it. I'm like, oh, maybe we can do a no income loan. They had a bunch of money, and then I'm looking at it. I'm like, no income loan, no ratio. Like they're great for what they're there for, but like that's if that's your only option.
Right.
Like they're not the prettiest, meaning there's points, they have a higher rate, they have all these things. Like if you can do it a different way, then great. That's what you want to do. But like I pulled this one up, I'm looking, I'm like, where does this money keep coming from that you're getting every month? Like it's in different forms. And they're like, oh, well, I have a trust. Like my parents left me a trust, and like that's where I get money from. And I'm like, how much is in there?
Yeah.
They're like 400,000. I'm like, that's your income.
Yeah.
Like
Easy.
we're gonna use that as your
We're gonna set
income
up a
now.
distribution.
Like we're gonna take that money, divide it, and boom, here you go.
And
Like
see,
do the
from that
calculation.
too, like, and I think this is what some people don't understand. When you have a large sum of money in an investment account, IRA, trust, something like any one of those, you know,
Scenarios.
type scenarios,
Yeah.
excuse me, you can do asset depletion. You
Mm-hmm.
can do oh God, qualifier.
Yep.
You can do monthly distributions from it. Like there's so many different avenues you can take, and it just to determine what that looks like and
Yeah.
what might be best for you.
Because when you're getting a mortgage, what is the number one question underwriting is asking?
Stability. Can you pay back the
Stability.
mortgage?
Yep. Can you pay it back? So a lot of times when you have a lot of assets sitting there, they're like, you can pay this back. You might not want to pay it all at one time and pay it off. Like sometimes you can just pay it cash. And it's like,
Right.
that's what they're looking for. So all right. So going into guidelines and all that, what's another big one?
Outdated information.
Hmm. This was really big during COVID because I feel like the guidelines changed every other day.
Yeah, but that's also like, man, I'm telling you, it really makes a difference where you work. And there's probably some like Stephen and I work for a mortgage company. We're technically a direct lender. We use our own money for financing. We have our own processing, underwriting, everything's done in house.
Mm.
But we also are able to broker several different other types of loans. But a mortgage broker is like the middleman, kind of like
Yeah.
they work for themselves. They do the loans, but then they outsource the processing and underwriting and stuff like that. And then they close with the investor that they're doing the loan through versus we close in the mortgage firm's name.
Yeah. And then
But
the
we
investor buys it
have
from it.
a team of underwriters and like when we've got Jane and Jamie and like some and Sherry, like people at the higher level that are scouring every bit of information that's changing. Like we get updates way before some other companies are giving out updates.
Yeah.
So we know when like FHA changed their minimum credit score
Mm-hmm.
during COVID. And it was like, I mean, it blew some stuff up for a minute. We were doing credit rescores like last minute, trying to just do anything and everything we possibly could. But we were way ahead of it. Like, no, we knew that they were being changed. We looked at our pipeline, who's like needs to go through a credit rescore, who is about to go under contract that isn't going to qualify anymore. there were crazy changes, but some of it's just simple changes. Like if you're talking to a realtor and they say like you have 20% to put down, slap them because you don't need 20% to put down.
That's what everybody thinks you do. Oh, you need 20% down. We hear that all the time. We were talking about this before we got on. I was like, the good agents that I have that have referred me, like they don't really they know that's not what you need, and they don't really try to stay there and say like, hey, talk to Steven about that. But like people off the street that I'll do like first time home buyer class, and 90% of them still think they need 20% down.
Yeah.
And I'm like, that's not necessarily true. I know like they ran like, oh, don't buy a house unless you have 20% down. We have talked about this on multiple episodes, but like it it's wrong. Like, is it better if you have 20% down? Of course, you're
The
borrowing
more you
less.
can put down, the better. If you've got,
Yeah.
if you're
But
buying
it's
a
not necessary.
$400,000 house and you have $400,000 in the bank, should you put 50% down? Maybe.
Yeah. Maybe it works
Maybe
in your
we got to work
situation.
on what like you're comfortable with, but also what that payment looks like. What payment is going to be super easy for you to make? Let's just say you lose your job and you go 6 months without it. Like, how can we help you maintain your mortgage payment so you don't get behind?
Yeah.
I mean, there's just so many different things we could look at. But can you put less than 20% down when you're buying a house? Yes.
Mhm.
Should you? Totally up to you. That's what we've got to figure out.
Yeah.
So, and that advice, I don't know. That
Uh,
you need to work with somebody that is up to date on different changes and market changes. Like if you're
Actually
going to go buy
understands
a
the
house
market.
right now, the house has been. Here's the other thing too. Like we came out of COVID where buyers they were paying over appraised value. We were
Mhm.
waiving inspections, waiving appraisals, like all this craziness because that's what it took to get the home
Yeah.
in almost every scenario. So now do you have to do that? No.
You don't have to.
No, you can offer less and ask for a seller credit, and you're likely going to get an offer accepted right now. Just saying.
And I think like you need to have somebody that actually understands the market, understands things. Like I always go over rates and look at different things for people, and they're like, "Oh, how do rates really work?" Oh, like, oh. Then I'm like, "All right, you got the mortgage-backed securities, and you got the
Yeah.
10-year treasury," and I'm going through all this stuff, and you can just see their eyes glassing over, and I'm like, "Sorry," and they're like, "Yeah, that was a lot," and I'm like, "This is what I do. This is what I understand."
Yeah.
Where a
You
lot of
asked.
lenders it was a client. They were just kind of, because of the whole situation with Iran right now, like, oh, where do rates go? Like, how do we actually track to see it all? And the difference, and they just wanted to understand it. And my dad always says, my dad's always, and I'm like, here, dad, like, follow the treasury. If the treasury goes up, rates go up. If the treasury goes down, rates go down. Like, that's the easiest way to see it. Um, but like going through it all, and yeah, they just glassed over and they're like, oh, well, you definitely know what you're talking about. Like, we have no reservation of like, oh, should we go with Steven? Like, Steven knows what he's doing. So
Right.
like that, you definitely need somebody that understands this market, understands guidelines, understands the mortgage world inside and out. And the biggest thing to me is always, can they close it?
Yeah.
Can they close it? That's bigger than anything. I can offer you a 4.25 rate, but I can't close your loan. What good is that rate?
Well, so in that situation where we did the auto distribution with the grandmother, she was a
Yeah.
non-occupying co-borrower. So the buyer, I told him like I can get you closed. We start going through everything, and then he brings it up. He's like, "And what about the rate?" And just at this point in time, rates hadn't changed. There was no like fluctuating up or
Yeah.
down. The rate was just still the same. And I was like, "You mean the rate? The rate that like the other guy quoted, and he can't do the deal?" Like you shouldn't even bring it up. That rate doesn't exist. Why?
Yeah.
Because he can't close the loan.
Yep.
He offers you something that isn't real. It's a fantasy. Like I don't know what
Yeah.
else to tell you. And he just laughed. He's like, "Well, I just wanted to ask." I'm like,
I
okay,
mean, no
you
reason
can
not to
ask all you
ask.
want, buddy, but he
Uh,
could have offered you 1%. He still can't do the deal. It doesn't matter.
yeah. All right. So one thing that we usually see is people just don't understand the mortgage side of things.
And this is like, and we're not trying to point fingers, but there's times when we're dealing with real estate agents and they don't understand certain things
Yeah.
and they just don't understand like how financing works, but in a sense they're not supposed to. Like I'm a big believer in staying in your own lane. you
Yeah.
know I know enough about realtors and what their role is I know enough to be dangerous, but I don't ever try to step on toes. And when I have a client come to me like, hey, Derek, John Smith, realtor, showed us this house. What do you think we should offer? Well, no idea.
Not not
No, I didn't
knowing.
pull comps. I didn't do all the
Yeah.
research on the market of that neighborhood and everything. I have no idea. You should talk to your realtor. But if they were to ask like the realtor, like, hey, how can we get a lower interest rate? Don't ask the realtor, ask me.
Yeah.
That's my job. And so there's certain roles, but then when you've got a realtor, and God forbid it's a realtor that also has their loan officer license, and
Hmm.
is trying to like do the double dip. You can't be a jack of all trades and a master of one. You're a jack of all trades, you're a master of none.
Yeah.
And I've said that countless times. I don't think that you should have both licenses. I don't think you can really, I don't know. I just,
Well, there was an LO that was around here that was like, we can close in 5 days, and I'm like, that's illegal.
yeah,
Like,
hard
yeah,
money.
yeah,
Hard money,
yeah. I
yes, you
mean, yeah,
can.
there's certain one, but I'm like, they're the normal people, like what they're trying to actually tell you, like what they're talking about, you don't. They're
Right,
just trying to get you in the door. Like, no, this is, back when everything had to close quickly, in like 7 days, 7 business days is what it's supposed to be, is the quickest you can close. From when they sign, do the application and sign the disclosure, because sometimes they don't even do that in time and you're past that,
right,
or they don't understand the part of it is they don't understand the contract, or where it says, at least okay, we're in Florida using the Florida bar contract that's out there, um, where it talks about they put in an application, or they do their due diligence part of it in the application, and it's like, oh well, you have to give me conditional approval. And I'm like, no, I give the buyer the conditions, and the buyer decides if they want to move forward or not.
right.
There is no piece of paper we hand you to says here's all the conditions and they're conditionally approved and whatever. Like that's
Or
the
here's their
buyer.
loan commitment.
Yeah, well, with the loan commitment, like I get listing agents, like you want them to get out of that loan, the finance contingency as fast as possible. But I'm like, I can conditionally approve them, and the buyer can look at it and be like, I don't know if I can meet these conditions, because I can give anybody, you're technically conditional approved when you are pre-approved through us. You're technically
Right,
conditionally approved. Well, here's the condition we're gonna need. We're gonna need more pay stubs. We're gonna need this, whatever it
right,
is to show it. It doesn't mean that you can actually meet those conditions. And so, like, that's a lot of times where we're like, well, what the? No, it doesn't work that way. Or if I do give you, if I was a loan officer and I give you the conditional proof, that's the written notice that says that they're moving forward. So yeah, listing it. So if they had 10 days left on that loan contingency, I just wiped it out by giving you that loan approval.
right.
I,
Well, and the other thing too is like not knowing the difference between different loans and some of the limitations. Like we've seen this a lot with seller credits. In our
mm-hmm.
current market, we've got a lot of buyers getting big seller credits. And it's an awesome way to cover your closing costs, pay for a lower interest rate, have the seller pay for you to have a lower interest rate, or just simply save money out of pocket. And there's just times where the realtors are just like, all right, we're gonna ask for $25,000 seller credit. And I'm like, you can't.
Yeah.
It's too much. It's a VA loan and it's 4% plus customary costs or whatever. Or if it's a conventional loan and they're putting less than 10% down, you're limited to 3% of the purchase price.
Yep.
And then I've had people like kind of clap back, like it's 3% of the loan amount. No, it's not. It's 3% of the purchase price.
Yep.
100%. And it varies whether or not you're doing a primary home, second home, investment property for conventional, and
All
then
things you can easily Google and look up at the guidelines
yeah,
and see it. Like
yeah,
it's
this isn't a secret.
yeah. We don't just
But
change it here every so often.
yeah, and if you're doing a conventional loan, buying an investment property, you're limited to 2% seller concession.
Yeah.
But if you are maybe doing a brokered loan or a non-QM loan, where
Very
like
different.
bank statement, DSCR, no ratio, all that, that's per investor. The investor sets that. And I've got an investor that does 6%, no matter what kind of loan you're doing. They don't do all those different kind of non-QM loans, and it's 6%. And I've had realtors say, like, you can't get 6%, blah, blah. Yes, you can.
Yeah.
You
Depends on the
can.
investor that was buying. Because those are when we're talking about non-QM, they're usually portfolio. They are keeping them. So after the '08 crash, basically Fannie and Freddie came in and separated all the loan types and just
Right.
said, hey, you can't pull these together with here's a 20% conventional, and here's a no income ratio loan. You can't package them together and sell it as one. Like they got to be separate because we don't want to buy, you don't, people were showing like really good loans and then putting all the crappy loans in there. That's what was happening.
Right.
So they separated them on that. So like the investor decides what they want to do. So, I mean, that is one of, I think, knowing that difference with it all the time. And the biggest thing that I see catches a lot of people is, oh, they're going to pay your down payment. They can't.
No,
You
nobody
have
can
to, it's,
contribute towards your down payment
yeah,
other than the
oh,
buyer.
only the buyer. Now, that doesn't mean you can't get down payment assistance, can't get a gift from family because that's technically the buyer's money going in there, but the seller cannot give you that. And then,
Okay, so interested party,
yeah,
seller, realtor, loan officer.
yeah,
They cannot contribute towards your down payment. Can
or
you get a
paying
gift
off
from a
your
family
debt.
member? Sure. Can a family member pay off debt? Sure.
Yeah.
But as far as an interested party contributing towards your down payment, no.
Now, you get a lot lately because you're saying these sellers credits like are going crazy is you do what if your seller credit is within the reason is it within the percentage that you need but is over what you actually need for closing costs? What happens with the extra money?
Goes back to seller.
Or what do we use? So it has to go somewhere. Either it goes back to the seller, so you got to go back to the seller and say, hey, I can't use all that money,
Oh, you're saying in
or
this situation, I would probably just buy down the interest
buy
rate.
down the rate. Yeah, we buy down the rate because now your closing
We
cost just went
can't
up and covers
yeah,
it.
it's not like or
You can't get a check at closing. Hey, the seller, I have extra $5,000 from the seller, so I'm going to get a check for closing back at closing. Doesn't work that way.
right. So, and people are going to get confused by this because there are people that have received a check at closing, but that is typically getting your earnest money deposit back.
That means you put too
Um,
much money in
right.
of your
You
own.
know, but let's just say closing costs equal 10,000 and you got a $14,000 seller credit. It's within the limits, everything. We're going to look at like what $4,000 would get you in buying down the interest rate.
Yeah.
Because that's what we want to try and use up all that seller credit. Because if we don't, it just simply goes back to the seller. And we've had people like, well, can it just be a principal reduction? No,
Nope.
no, because that would be part of your down payment.
Exactly.
So
No.
we've got to figure out, a way to do it.
No. So another thing that we see a lot is people are focused on closing the deal, not the client's long-term success.
Yeah,
So that's usually where a lot of bad advice, like, oh, I just got to get this deal closed and then move on to the next one.
I've literally had realtors because recently I had buyers that went through inspection and a lot of things came up on the inspection and the home, like the current owners were going through a divorce. Like when the inspection was there, like the house was dirty. It looked like, and they just found some stuff and the reaction from the sellers was bad. Like, oh, that's no big deal. Like, that's not really a real water leak. And it just, all these things. And I was like, oh my God, this sounds so sketchy. Like they're trying to hide stuff. And I'm just fearful that in 6 months, my buyers are going to call me saying we made a mistake. We found more of this, that, whatever. And so I encourage them. It sounds like it's our it's in your best interest to cancel.
Yeah.
And they were just like, we're feeling the same way. We're going to think about it. We'll let you know. And they ended up canceling, and I was worried. Now this realtor did come back and say, no, I agree. We're going to find you a better house. But I've had realtors before like, oh, well, I really needed this commission. What? What? So you wanted them to buy a house that had a bunch of issues just so you can make a couple dollars.
Yeah.
Like, no, that's awful. Because the last thing I want is, like I said, buyer coming back 6 months later saying we made a mistake. Like, what do we do?
Yeah.
And
Yeah,
then you've got to sell a house that has issues.
well, I mean, just when I texted you guys on Friday of that one client, you're closing 3 deals, and like, the title company's like, this doesn't look right. Like, maybe you should like see if they're overcharging him. And she's been trying to get him over to me for a while, and he just like he's kind of stuck on this lender, not anymore apparently. But like, yeah, he's like, this lender's making me. I gotta close by this time, this thing. And I'm looking over, I'm like, they're like, I'm not running your numbers right now, but like, I can see they're charging you 15 grand more than we would charge you, like right off the bat. Like, even if our fees were like I had maxed everything out, would be 15 grand less. He's like, what? I'm like, yeah. So you're doing 3 deals right now. That's $45,000 that you are paying for no reason.
Because you just are talking to the wrong lender.
you're talking to the wrong lender. They're shoving you through there. They're trying to like at the end. And he's like, I feel like they're trying to get me by the end of March, so I have to, I have to close so they can make what their commission on it. And I was like, hey, guess what? I got bills in April. I got bills in May. I got
Yeah.
bills in June. Like I got bills every single month. So no, I don't care if you close this month or you close next month or you close a month after, whatever you got to figure out. Like my bills are still there, and
Right.
I'm pretty good with my budget. I can pay my bills, but like I don't
Right.
need you to close, kind
Yeah.
of thing. But he was being forced into this, and I think he had other stuff in that. Yeah, now he's like, all right, Steven, like here's these houses. I need to go through all of them, figure out which ones that we need to refinance. And like he's an investor, he moves it back and forth, and it's like, yeah, after a year of getting raped over the coals, you finally realize. He's like, yep, it's just I made bad decisions in business, and that's what you do, and that's how you learn, and I'll move on.
Yeah.
So you can't don't focus on that transaction. It's finding the right strategy. So
Right. And then I'll say one of the ones that probably every loan officer and realtor promise, but then don't follow through on is one of the most simple things to do: communication.
yeah.
They
Oh
promise that they're going to communicate. Loan officer is going to call the realtor saying, "Oh, we communicate, like we're great at communication, blah, blah, blah," and then they don't.
yeah.
And they don't. Or it's just a matter of knowing what communication is needed. Like there's a few realtors that I work with, and they like just over the years, we've built so much trust together that they don't want me to call every single week. They know that once we go under contract, Derek's going to close the loan.
Yep.
They want certain milestones to be communicated, but otherwise, like they don't necessarily need me calling them, every single week and like, hey, here's where we're like. They just want to know, like, let me know if there's a problem, let me know when appraisal's in, let me know when we're through underwriting, and that's it.
Yeah. I
But
just had one where it was a almost I think it was 60 days or longer closing, and the listing agent took our offer because my name was on the pre-approval.
same,
We've
yeah,
never worked together. She knew who I was, and she's known me for a while. We've never done any kind of deal, but that's the reason she took it was, hey, your name's on it. I think I don't know if we were competing with another offer on it, but like her seller, like she knew it was good. Like she's
right,
known me well enough for that part of it. But there are times where I had to call her, and I'm just like, it's such a long one. I'm like, there's nothing that's changed like 2 weeks ago, but I feel like I need to at least tell you like nothing has changed. And I'm like, and this is the next thing. And she's like, all right, that's good. I'm like, I feel like I can't let you not know, but like you should never go, wonder what's going on with my mortgage. That
yeah,
should never be a question that comes in your head.
yeah,
Like there's always a communication. Like Derek and I have these Tuesday updates. I think you do on Tuesday too. Like this is when we update everybody that's involved of what we can ethically update them on of what's going on with the loan. And
sure,
it's really, I always call it like that's your catch up date because you're probably talking to everybody throughout the process that hey, next Tuesday comes along and I haven't talked to them since last Tuesday. Probably need to update them just to know
right,
what's happening. So
yeah. I mean, and there's just times where like I've got a realtor that we're working on a pre-approval for a client or they're shopping, so I talk to them on a Friday, and then I also touch base like, by the way, the appraisal came back, like we're going to go on this buyer that we have under contract. So then when Tuesday comes, it's 3 days later. You know what I mean? Like I don't need to,
yeah,
I don't need to tell you
tell you what's going on.
anything.
Yeah,
Like it's just I'll be repeating myself, so I'm not going to do that. So it
yeah,
just depends, but
yeah,
I don't know. The other thing too is just I would say when you're dealing with a loan officer or realtor that is overly confident but without clarity, like, and I guess like maybe using the word cocky,
yeah.
they
It's
come
more.
off like sounding so confident or whatever that buyers trust them. But confidence doesn't always equal like being correct.
Or they
So,
don't they don't they don't disclose the whole picture.
right.
So like I'll be
Or,
at these realtor meetings, and there'll be another loan officer talking about this whatever product, and they think it's the brand new best thing ever since sliced bread. And then like I'll get text messages and our realtors that are sitting next to me like, can you do this? And I'm like, yeah, we can do this. But like there was one that was out there. It was basically a no income loan. They talk about like, oh, we don't need to show income and all that stuff. And they were explaining it differently. And I'm like, it's 2 to 3 points added on. It's about an 8% rate currently to 8.5. And they're like, oh, that sounds horrible. I'm like, yeah, it's your only option.
like, if
Or
you have a
like,
buyer that's considering like a hard money loan or
yeah,
this, yeah, no ratio loan can be great.
yeah, it's better than a hard money. And this is so you take this one, but that's the only other loan you can get.
Yeah, and then
You're
there's
not
times
going
like
like,
you've
well,
got to look at like,
I got 30% down conventional and I can show all my income, but I don't want to, so I'm just gonna do a no income. Like, no, you're not. Like that
yeah,
makes no sense at all. You're
yeah,
gonna pay 2 to 3% more in fees. You're gonna pay a percent to, I would say at least a half, 1.5 to 2% more in the rate,
right.
every single month because you're doing that.
Well, and
So
like I had a buyer that was selling two properties. They were listed, not sold yet. They found their dream property. So they had enough money for a down payment. They just, they couldn't afford to have three mortgages. So
yeah,
we actually did a no ratio loan, but knowing that we were eventually going to sell this property and then take those proceeds and then do a refinance, just a normal conventional refinance. And we just had to make six payments.
yeah,
That's all.
yeah. The last
So like
no
we use
ratio
that
one
as
I
like
just did,
almost like a bridge loan.
she was like, hey, she was selling a house in California that couldn't sell. She was waiting for this one to come. She wanted to buy this house. We did it all. And then, like every month we talk, and she was like, I know I can't pay off my loan until this because it'll be the 6 month mark. But she's like, I just sitting there. And she was like,
Yeah.
I just put all the money in one account for those payments, and then I'll just pay it off then. But like her house in California took months to sell. Like she thought I was like, I'll help you with this. I was like, if your house goes under contract in California, is going to close before this one. Like we can pull out. Like that's fine. I'll stop the mortgage and you just pay cash. That's what you want to do. Like you're not going to hurt my feelings. I'd rather you just tell me. And she was like, oh, okay. I'm like, but that's not happening. Like you've been on the market for 6 months. And you
Right.
think suddenly you're going to buy this house and the next month, like you're going to be under contract.
Right.
Like if it happens, great. But yeah, because you just see a lot of loan officers just over promising, under delivering. Just all this, I can get you this and this and this. And it's like, okay, well, how do you do that?
Yeah. So flip it.
Yeah,
How can buyers avoid getting bad advice?
it's better questions.
Yeah. Don't be afraid to ask questions. I never get upset when I've got it happens a lot with first time home buyers. Derek, I've never done this before. Like I have quite a few questions. All right, great. Let's schedule a time to go over them.
Yeah,
Write them all down. I'll get on the phone with you. We'll go through all the questions you have. Look at the loan estimate, any questions you have on any of the fees, stuff like that. Seller pays for this, you pay for that. You know, appraisal final inspection fee. What is that? Well, if your appraisal comes back and it's, subject to a repair being made, we need to make sure that repair is made and you have to pay for the appraisal or the appraiser to go back out and
confirm it.
confirm it. That's all. And they're like, oh, and I was like, most of the time that fee comes off.
Yeah,
Like
we have to disclose it like he's going to.
95% of the time.
Yeah. Oh yeah. I think I've had it one time in the
Yeah.
last for a while that I had to go back out there.
But like as a buyer, like, why do you recommend this? What are my other options? What's the downside, if we go this way, or what's the positive side of doing this? Just ask more questions. And if you don't get like clear answers, or that loan officer or realtor starts fumbling around, maybe you get a second opinion.
Yeah, because I always do a pre-approval Zoom call where we're going over all the numbers. Here's option A through Z, or it could be just you might only have option A, but we're going to explain why you only have option A. But here's all these different options that you can do, what it all looks like, understanding everything. That's a 45-minute Zoom call, but I tell them like it could take 10 minutes because you don't have any questions and you understand and you're going through, but like this is your time to ask everything you think of and anything you can't think of and afterwards, like text me. Like we need to jump on a Zoom again to go over and look at
Right.
it. Like I will. But I'm like, yeah, it's a 45-minute slot. But I tell them at the beginning, I'm like, I have a 30-minute buffer after this. Like
Right.
you're technically taking an hour and 15 minutes on my calendar. Like nobody can book that 30 minutes because if it takes you an hour or so to go through it all and understand it, that's what it's. I want you, you're supposed to walk away being like, I understand as much as I can.
Right.
Like you shouldn't question anything. Like, oh, I don't know. I don't know what this is. I don't know how this works.
Yeah.
I don't know what rates are. Where does it cost to buy it down? I don't. And like the biggest thing is to know the loan estimate. I want because if people do go and start shopping around or start looking, they're usually going to an online lender that's showing them people are so rate focused. Oh, I want a rate of 5.99. They go, oh, they're offering that. What they don't look at is, okay, what does it cost to get that?
Yeah, it costs $15,000.
They
And
don't
we
look
were
at
at
that part.
6.25, not costing anything.
Yeah.
They're like, well, Derek, this one's a better deal. It's not.
Yeah, it's
It's
not.
not. And because you want 5.99, I can do that too at a much cheaper cost. You just saw that lower interest rate and you started jumping for joy thinking that but your cash to close is astronomically higher. Is it worth it?
Yeah.
You know?
Even lenders offering the same rate side by side, like we are not, there's a lot of things that we don't, like we're not brokers. We're independently, like, yeah, can we broker it out if it needs to? But like, a lot of times people don't realize is there's a broker fee. So
Yeah.
they're paying an extra 0.5 to 1% on sometimes of these brokers. They're like, well, but they just think it's normal. Because I've had it where I've gone through people and they're like, where's the broker fee at? I'm like, we're not a broker. We don't have a broker fee. Like this is section A of the loan estimate is the only thing that we're charging you that
Yeah.
as a company. Like there is nothing else. And I, on our loan estimates, it even has a spot where like loan amount points in here where it'll say zero or have nothing in there. But like I always love that it shows that because that's where it's supposed to go. That's where you're going to see it.
Right.
If people are charging points,
Origination
it's right there.
fee.
Yeah. Origination fee, broker convenience fee. I've seen that. I'm like, I don't know if I would ever want to name it that way, but it's like broker finder fee. There's oh gosh, it's horrible. And why are these? Because they're going to shop to these other investors, which we do too, but it's basically on the back end and internal. But like they're looking at all these investors and it's like, oh, well, they're only giving me 1%. So you got to pay me my commission, the rest of it. And that's how they do it.
Right.
And that's just what people just don't understand it.
Yeah. No, I mean, I had a client wanting a second opinion. They were talking to a broker first, and once I could offer the same rate, but at like $9,000 cheaper. $9,000. They're like, Derek, we don't understand. I'm like, look at it's the origination fee and like the points that they're doing, whatever. We don't have to charge points for this rate. Like we're $9,000 cheaper for the same exact thing that you were offering.
Yeah. So,
So
I mean, we kind of went over what does good advice look like?
I mean, it's clear, tailored to the client, explains the pros and cons, focuses on their short-term goals, long-term goals, finds that happy medium for what they want, but it's focused on the buyer and the realtor and the lender are working together. Like it's a collaborative effort to make sure that that buyer is happy.
Exactly. I think it's mainly what does the buyer look like? What do they want to see? How do they want to see it? What are their goals with it? And a lot of times you're like, okay, so how long are you going to be in this house? I had one recently who wanted to pay one, like, I'm going to be here 3 years. Then why are you paying points for a rate that's going to take you 5 years to recoup? Like, oh
Right.
yeah, I don't want to do that. I'm like, exactly. Go put that money somewhere else.
Yeah. Well, then
I'm like, granted, if the seller is paying for it and they paid all your closing costs and then that your ROI is instant because you're not paying for it. But like, if yours coming out of your pocket, figure out how long you're going to be there. What is a recoup to get that money back? Does it make
right.
financial sense? I had one that they're paying $10,000, and then we kind of go through it all, and I'm like, well, the question, like, yeah, that makes sense. It made kind of sense to him, but I'm like, what else could you spend $10,000 on? And then that's like, maybe it's not on this house. Maybe it's $10,000 that you want to spend somewhere else in your life. And they're like, oh yeah, like I'd rather put it here.
Or pay off debt.
Go do it there. You're like, you don't need to put it into your mortgage just because you're looking for that certain rate.
Right. Yeah. So I guess the key takeaway, there's a lot of great professionals in our industry.
Yeah.
We work with a lot of them, but not all advice is created equal.
No.
So if you start feeling the need to ask questions, ask questions.
Ask questions, get the clarity. Don't be afraid to ask those questions. And the difference between good advice and bad advice can cost you time, money, it can cost you thousands and thousands of dollars if you aren't careful with it.
Yeah. And that's it. That's all we got. Hopefully somebody takes something away from this episode, maybe saves them a little bit of money. But this has been another episode.